Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Amazon. Is this large cap growth stock still worth investing in 2021 and beyond with Bezos stepping down? Let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Amazon offers a range of products and services through its websites. The company's products include merchandise and content that it purchases for resale from vendors and those offered by third-party sellers. It also manufactures and sells electronic devices. It operates through three segments: the North American segment, International, and Amazon Web Services. Now, Amazon Web Services solutions includes machine learning, analytics and data lakes, Internet of Things, serverless computing, containers, enterprise applications, and storage. In addition, the company provides services such as advertising. It also offers Amazon Prime, which I definitely have that. It's a membership program that includes free shipping, access to streaming of various movies and television episodes, which I use all the time. Now let's look at some of the biggest news of the company. So the biggest news for Amazon was the announcement of Jeff Bezos stepping down as CEO. Now some are worried about that, but I'm not too worried, and I will get in that in a few minutes. But let's go ahead and look at some of the fundamentals of the company. So Amazon has a market capitalization of around $1.7 trillion. It's currently trading at $3,277 a share. And the 2020 revenue was $386 billion with earnings of $21 billion. Now, earnings are expected to grow significantly over the next 3 years. Revenue projections going out to 2025 estimate $725 billion in revenue and $65 billion in earnings. Now, Amazon current net profit margins of 5.5% are higher than last year's of 4.1%, and Amazon's return on equity of 22.8% is considered high. Now, Amazon short-term assets definitely exceed their both short-term liabilities and long-term liabilities. Now, their debt-to-equity ratio of 36.1% is considered satisfactory. Amazon's debt is well covered by operating cash flow of 196.1%. And Amazon's interest payments on its debt are well covered by EBIT of 21 times coverage. Now, looking at the evaluation analysis, because Amazon is in the internet and direct marketing retail industry and has positive earnings, the PEG and PE and price to book ratios are the most appropriate valuation measures. The price to sales ratio is less instructive than the PEG or PE since the company has positive earnings. Therefore, Amazon seems inexpensive with a PEG value of 2.05x below the internet and direct marketing retail industry median of a PEG of 2.16 times, although their PE is 78.5 times, which is above the industry median of 32.02 times. Now, looking at the profitability analysis, Amazon is one of the more profitable companies in the internet and direct marketing retail industry, and its operating and net margins are above the industry medians. Let me bring it back here. So what do the analysts say on this one? Now, the analysts say consensus is a buy and a strong buy. The average Amazon stock price target is $4,002, with a high estimate of $5,200 and a low estimate of $3,048. With a current price of $3,277 a share, it's currently undervalued in my eyes. Now, going over a few of the research analyst reports, the Ford Equity Research Report has Amazon as a buy. Now, Ford's buy recommendation on Amazon is the result of their systematic analysis of the three basic characteristics: earnings strength, relative valuation, and recent stock price movement. The company has generated a negative trend in earnings per share over the past 5 quarters, and while recent estimates for the company have been raised by analysts, Amazon has posted better than expected results. Based on operating earnings yield, the company is about fairly valued when compared to all the companies that they cover. Share price changes over the past year indicates that Amazon will perform very well in the near term. The Street Ratings also has a buy rating on Amazon that is driven by multiple strengths, which they believe should have a greater impact than any of the weaknesses and should give investors a better performance opportunity than most of the stocks they cover. And they said the company's strengths can be seen in multiple areas, such as the impressive record of earnings per share growth, compelling growth in net income, robust revenue growth, solid financial position with reasonable debt levels by most measures, and notable return on equity. Although no company is perfect, currently they do not see any significant weaknesses which are likely to detract from a generally positive outlook. So based on all that and my buy, hold, or sell recommendation on Amazon, here are my thoughts. First, let's talk about the big elephant in the room. Bezos stepping down and Andy Jassy taking over. Now, Jassy has been Bezos' shadow for years, and I would consider him a Bezos, a replica clone. I feel Jassy should inspire confidence in Amazon investors in the future. Plus, Bezos' new role as executive chairman will be kind of similar to his current role as CEO that he had. Now, looking at Amazon business from 100 miles high, you got to look at overall what Amazon is doing. Amazon is firing on all cylinders right now. It hasn't slowed down because of the pandemic, and Amazon continues to make shipping faster with many items available within one day. I definitely use that a lot. I feel that Amazon has a lot of extremely smart people running the company, and Amazon's future growth prospects are enormous. Let me just go over a few of those growth projects that they have going on with Amazon. Now, they're in the video games. Amazon Game Studios has been churning through almost $500 million a year trying to develop a blockbuster game. So far, none has been a big hit, but Jassy is still committed to the gaming business. Groceries, not content after acquiring the Whole Foods market, Amazon launched a lower cost grocer called Amazon Fresh, opening its first stores in California and Illinois last year. The company is also scaling up its already booming food delivery operations. Now, looking at Amazon Studios, Amazon's gone Hollywood, spending billions of dollars to compete with Netflix. But even though Netflix is probably a little higher on that market right now, and I did an analysis on that, so check that out. So they're also into drones. Bezos predicted that Amazon would be delivering packages by drones in 2018. Now, we're 3 years later, and they advanced their drone technology, but the flotilla isn't operational yet. I wouldn't be too concerned with their drones right now. I'd rather just get it delivered by person right now. They're also into healthcare. Amazon started an online pharmacy and has opened neighborhood clinics for employees. Analysts expect even bigger moves. CNBC reported that a skunkworks R&D team under Jassy even set a goal of curing the common cold. Now, that's kind of lofty. I don't know if they'll be able to do that, but that'd be great if they did. Now, e-commerce, Amazon's warehouse footprint, formerly relegated to the exurbs and transportation hotspots, is growing. The company is said to have plans to add more than 1,000 delivery hubs stitched together by cargo jets and thousands of trucks. That's great news because we definitely need faster and faster and faster delivery times. Amazon has digital helpers. Amazon is working to shore up its position in the market for home technology devices, rolling out flying home security cameras, a proprietary low-power wireless network, and perhaps someday a home robot, which I don't know about right now, but that'd be great. Now, they're also in the cloud. Amazon Cloud's division, the source of most of the company's profits, is expected to rake in about $58 billion in revenue this year, more than 4 times the total in 2016. Now, Jassy has led the unit since its unfolding. Now, the fundamentals are solid as a rock, and I do not see any slowdown in the next coming years for Amazon. Amazon, to me, seems like a no-brainer to have in your portfolio for long-term growth. Therefore, I am a long-term bull on Amazon, targeting a price of $4,000 over the next 12 months. Yes, I think they definitely will get there over the next 12 months. So there you have it, folks. And as always, don't forget to smash that like button down below and consider to subscribe and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks, ciao.